This CPA Australia's live webinar is presented by Ian Taylor, Josephine Haste and Mark Morris. Moderating today, we also have Michelle Webb, and assisting in the chat box, we also have Sharon Miles. Now, to start us off, I'm just going to open up and welcome Michelle Webb into the conversation. Michelle, just open up your mic.
Thank you, Linda. Hello. Welcome, everybody. So we have Ian Taylor with us. Ian commenced as the chair of the Tax Practitioners Board in 2013. Ian was previously a tax partner with KPMG and also ran his own practice as a registered tax agent. Ian is a fellow of both CPA Australia and CANS and has been a committee member and chair of various committees for both professional bodies. Also joining us today is Mark Morris. Mark is a CPA, and many of you may know Mark from his former role at CPA Australia as Senior Tax Counsel. Mark is now a Professor of Practice at La Trobe University and runs his own tax consultancy practice. He is also a Quality Reviewer for CPA Australia. Josephine Haste is the Manager of Quality Review Education, Ethics and Professional Standards at CPA Australia. Josephine is also a member of both CPA Australia and CANS, and she has worked for CPA Australia for more than 15 years, and her responsibilities include the Quality Review Program. So today's session is a follow-up from a session we held earlier in the year on client verification and engagement. So there's a few supporting resources that we released after that webinar, which you may wish to access throughout the session. But how it's going to work is we're going to revisit the key messages from that webinar. Each of our presenters will talk for roughly 5 minutes going through those key messages, and then the focus of today's session really is a Q&A opportunity for you to ask any questions that you may have with regards to client engagement. So I would encourage you to type any questions into the chat box, and we will address those in that roundtable Q&A discussion component of this webinar. So without further ado, I will hand over to Ian to get us started.
Okay, thanks Michelle, and good afternoon everyone. Good morning if you're still in WA or in South Australia indeed. My task here today is to just recap some of the things we've previously talked about in relation to your obligations as a registered practitioner under the Tax Agent Services Act, and in particular the Code of Professional Conduct. Now there are two items in the Code of Conduct which are particularly relevant in the context of today's discussions, and they are Code Items 9 and Code Item 10. And they require you as a practitioner to take reasonable care in firstly ascertaining a client's state of affairs, and secondly, having ascertained the state of affairs of the client, then ensuring that the tax laws are applied correctly to the circumstances in that situation. So there's no set formula. The question obviously is what is reasonable care, but there is no set formula for determining what exactly it means, but there are a number of things that we can help you with in terms of trying to ensure that you do meet your reasonable care obligations. So some of the factors that will be important and relevant in determining whether or not you've exercised reasonable care are firstly the terms of engagement between you and your client. So here we recommend that you have engagement letters in place which identify exactly what you are meant to do and exactly what your client is meant to do. That's a good starting point. The other things that could be taken into account are the complexity of the transactions. So obviously in that context, the more difficult the transaction, the more complex, etc., then a greater need for reasonable care. Also in that context, the client's circumstances are particularly relevant. So you need to look at the level of sophistication of the client, their circumstances, their knowledge of the subject matter and the subject area, and tax laws generally. And I think the other factor that needs to be taken into account is the nature of any existing relationship between you and your client. So I think in that context, again, it's fair to say that if you've got an existing relationship with the client which is long-standing over a number of years, you understand the client's circumstances, then you'll have a better handle on that set of circumstances than if it's obviously a brand new client, in which case you might be asking a lot more questions about the nature of the client's business, what they do, how they do it, and the particular transactions that you're advising in relation to. So those things will all need to be taken into account. Now, I will point out that Code Item 9 does not require you to do an audit or to examine and review all the books and records of the client. You don't need to independently verify the accuracy of information as such. However, you do need to ensure that the information that is supplied by the client, supplied to you, and ultimately that you pass on to the Commissioner of Taxation in any return or any statement that you make to the Commissioner on behalf of the client, you need to ensure that that is credible or at least appears to be consistent, believable, etc. But as I say, it doesn't require an audit, so you don't need to go through all the invoices. Give you an example there, might be if you've got a very generous client who's donating a lot of money to charity. Let's say they tell you that they've got donations totalling $10,000. Do you need to cite every one of the receipts? The answer I would suggest is no, you don't. Particularly if it's an existing client, you know the previous circumstances, but you might ask to see the first or the top 10 receipts or the top $10 value receipts for that particular client. They might represent 85% of the total, and if everything was correct in that context, you wouldn't worry about the remainder. So no need to do a complete audit, but you need to ensure that you have credible information, believable information, which ultimately you submit to the Commissioner on behalf of that client. Now, Code Item 10 does require you to, having taken reasonable care in relation to ascertaining the client's state of affairs, you then need to ensure that the tax laws are applied correctly to those circumstances. Again, there is no set formula for determining the reasonable care element of this requirement, but applying the tax laws correctly to the circumstances may include you referring to, obviously, the income tax legislation and any related materials, any case law, any rulings and determinations issued by the Commissioner of Taxation on the topics, any other guidance material published by the ATO or indeed by a recognised professional association, and any other relevant materials that you can get your hands on. Now, again, you don't always have to be 100% in 100% correct in 100% of the circumstances. So obviously it's just a matter of saying you can be incorrect and you might still have exercised a reasonable care responsibility. In essence, I suppose, so long as you've got a reasonably arguable position, which ultimately might be challenged, might be overturned by, or your view might be overturned by a court or by a tribunal, nevertheless, you have done whatever you can to ensure reasonable care has been applied to applying those tax laws correctly. Now, look, I'll very quickly turn to just the consequences of failing to meet your obligations under these two codes items. Hopefully, these are circumstances which will never occur or never will impact any of those that are online today. But what does happen if you fail to meet the obligations? The board has an ability to apply a number of different sanctions. The least of those is a written caution, essentially a slap over the wrist, don't do it again. We can take it further, obviously, with a written caution and usually accompanied by an order, and the order may be to require somebody to do certain things, such as completing a course of educational training specified by the board, or perhaps providing services only under the supervision of some other registered practitioner, or limiting the sort of services that a person might be able to provide. Obviously, in the worst of circumstances, the board will turn to either a suspension of registration or ultimately a termination of registration. Now, very quickly, one case study which we'll refer to is that in January this year, the board rejected a renewal application, and we found that the company's sole director was not a fit and proper person as a result of the company's breaches of the Code of Professional Conduct, including the reasonable care provisions that we referred to. So the board found that the company had breached section or subsection 30.10.9 of the code in that it didn't take reasonable care in ascertaining the affairs of 11 of its clients by failing to ensure that the income tax returns lodged on behalf of those clients contained accurate information. They failed to adhere to the code in that they failed to ask sufficient and pertinent questions regarding allowances and work-related expense deductions, and to cite necessary supporting documentation to substantiate those claims. So the board also found that the company had breached 30.10 of the code in that it failed to take reasonable care to ensure the tax laws were applied correctly in the circumstances in relation to the preparation and lodgement of income tax returns. And it did this by incorrectly applying the eligibility criteria and substantiation rules relating to the claiming of deductions and allowances. So the board was very concerned in this case about the travel and other work-related expenses claimed by the company, and decided to terminate the registration of this particular entity. Or, no, sorry, not terminate, we just rejected the application for renewal, which is the same effect, the same impact. So this does give you an example of one of the most serious consequences where the board is likely to terminate or not accept it. So I'll finish, however, on a positive note by saying that in the main, most practitioners do the right thing. So it's roughly around 99% of practitioners who are doing the right thing, and less than 1% or thereabouts that actually need to be subject to action by the board. So overall, that's a pretty good result, and as I say, those consequences of failing to comply with the legislation are hopefully never going to apply to you. Okay.
Okay, thank you, Michelle. Thank you, Ian. I guess what I'm going to briefly talk about now is the importance of verifying client data from the perspective of being a CPA Australia public practitioner and satisfying your professional obligations under the accounting standards, particularly APES 220, which we'll talk about today, and APES 320, APES 325, which require us to effectively ensure we've got quality processes in place regarding the conduct of all our business, as well as trying to effectively manage risk in what is a pretty dynamic environment. Like Ian made a comment very wisely about reasonable care, the importance here is to have processes in place which generally give you a structural framework where you can ensure that you're minimising risk. It's inherent in any public practice firm that the firm will have to use professional judgment to verify the accuracy of information and therefore the provision of advice or services. From a perspective of APES 220, one thing I'd like to particularly stress is, next slide if that's okay, is the importance of exercising due care in the provision of taxation services under paragraph 3.11 of APES 20. In a sense, I often think of the due care requirement as being very similar to the reasonable care requirement that Ian just summarised for us. To some extent, I think this involves an element of common sense. If you want to mitigate risk and you've got a client and you want to assure yourself of the accuracy of what they're saying, really make reasonable inquiries until you satisfy yourself of the factual background they're providing you. In other words, if you've got doubt, ask questions. I recently had an issue with this where I had a client who was saying that they were a property developer and the work was on capital account. When I actually made further inquiries, I found that over the last 30 years it's been spasmodically involved in property development. And likely the development would actually be on revenue account and any profits made accessible as ordinary income rather than under the capital gains tax regime. So making those inquiries when you've got any doubt is really important, and I think reasonably congruent with the reasonable care requirement of the TASA. In terms of quality assurance verification processes, really, I was just briefly going to talk about that and the importance under APES 220. Next slide, please. Thank you. That if you have the right processes in place under your quality control manual, you'll be able to, at least to some degree, effectively manage that process of verifying data and minimising risk. Very important point here is, I think, verifying both the identity but also the integrity of any new clients you take on board. Really, one effective thing you'd see in a quality assurance manual typically would be the use of a client screening checklist, where you do go through a process of carefully considering whether you should accept a new client, really having some process in place to apply in the selection of the client, either there's been a referral or you've done your own homework about the client's background and determine from that whether you should accept them or not. Inherent in this is the issue of ethical clearance letters as well. I think over time, perhaps ethical clearance letters weren't perhaps as conventionally used as they were in the past. I'd strongly recommend that you ask your client whether you can issue a letter of ethical clearance and get that ethical clearance just in case you get some feedback that you shouldn't take the client on board. Now, in terms of provision of advice, really, as Ian indicated before, with the TASA, there's a need to exercise reasonable care. Under your accounting standards, Act 220, there's a need to exercise due care. This really means you need to get supporting agreements and records for the provision of services you provide. You only have to look at the moment with the work-related expenses issue that we're all aware of, the importance of getting invoices and receipts and querying the client to make sure that the claim is actually allowable. This is obviously an area that is a focus from the tax office, but in any event, it's a professional requirement for you to do that. To the extent you've got work, and this may particularly apply in providing tax advice, you find there's gaps in information, then really it's incumbent on us to clarify that with the client, and particularly in terms of providing any written advice, making sure that if you are making an assumption that the client signs off on it and confirms that that is the correct way to proceed. Very important point, given we're all busy, is the need to document any material discussions with clients. It's very easy, particularly on a Friday afternoon at 4 o'clock, to say, I'm going to do that, I'm going to do that, I'm going to do that, and fail to do that file note, fail to do that email, so you've got a record of what's been said with the client. I did have one client some years ago whose story would change every time I saw him. I think he always saw it as a game. So what I did was forensically document those discussions because I knew the story would vary. And of course, that will help minimise risk by ensuring that you've got a good grasp of the factual context you're giving advice on. Checklists. Checklists, I think, are important, particularly from a tax compliance point of view. It's very easy to kind of lose sight of the overall, and CPA Australia has developed a whole range of different checklists, principally in taxation, but in other material as well, which is available to all of you on the CPA Australia resources page for public practitioners. One thing that also gets missed sometimes, I find on QA reviews, is the need to continually monitor the client's integrity. And if you have a client retention checklist where you would really examine the integrity of the client, that would be really prudent. We all start with the client we think is, you know, a good opportunity and kosher, and then with retrospect, find that the client can change, particularly, for example, there's a change in management, and maybe their risk profile isn't congruent with your own as an agent. So going through that process, even again, time-consuming, but again, if you have reference to the resources base for public practitioners on quality assurance reviews on the website, at CPA Australia, you'll find tools that will help you in that process. What can go wrong in practice? Just a few, I guess. One is giving advice on the run. The Friday 4 p.m. phone call, you know, you want to get out of the office. That's really difficult. It's important to kind of take stock and make sure you understand the factual context of what the client's raising with you, because if there's omissions in the facts or if you misunderstand the facts, the advice could be wrong. And as Ian indicated before, we're working in a really complex regulatory environment. Certainly in my field of taxation, it's constantly evolving, constantly becoming more complex, so there's a danger in giving that advice on the run. Second, avoid a client who promises to do better next year. When I first started in this game, you do review letters of companies and you put everything they should address next year, and you'd hope, perhaps not like Pollyanna, they'd address it, and then you go back and they find that they really wouldn't progress it. Really, if you've got issues, you need to put on the table with the client and make clear your concerns. The client story changes, I think I've already covered that, where you've got a scenario where you really have to tie down the client to make sure that the factual base you're operating on is clear to both of you. And particularly from a work-related expenses perspective, avoid any pressure where a client comes to you and says, well, I'll get $800 deductions from you, but I go down the road, I can get $3,000. Clearly, you need to comply with the requirements under the Act in terms of deductibility as well as substantiation for work-related expenses. But of course, this is all in the context of, the next slide, a crackdown on work-related expenses, which if you go back and look at the history of this, the ATO obviously got a focus on this. There was, I think, work-related expenses around $22 billion in 2015, and clearly what's happened since is the ATO now devoting considerable resources to scrutinise work-related expenses. They've now got the capacity with data analytics to identify anomalous outcomes and will actively contact agents to determine the veracity of what's being claimed. So work-related expenses, which I know we've dealt with for many years for those who've been in the profession a long time, they're definitely in the gun. You have your professional obligations as well, clearly. But in addition, don't be surprised the ATO are now got a far more sophisticated and better resourced approach to it than ever before. All of which means tax agents must comply with their record-keeping rules. You need procedures on that in your quality assurance manual too, in terms of the retrievability of data and files, which have to be kept confidential but be made available so that you meet your record retention requirement. And obviously, the final point, again reiterated, if you've got any concerns with your clients, if there's something you don't understand really in terms of meeting your professional obligations as a member of CPA Australia, you need to make further queries. Now, to the extent you have a compliant quality control manual and a compliant risk management manual, you can put processes in place which will help embed that capacity to avoid risk. And with that, I'll pass to Josephine.
Thanks very much, Mark. Thanks, Ian and Michelle as well. So to wrap up our formal part of the discussion today, we wanted to touch on your requirements under the professional standards, in particular APS 305, which are your terms of engagement. Now, the most common question I get from members with respect to this area is, do I really need to prepare an engagement document for all of my clients, including my hundreds of I-return clients? And the simple answer to that is yes. There needs to be some form of engagement documentation for every single client that you have. And after I deal with the size and the disbelief of that, when I start to explain to members that really the engagement document is your protection from any adverse findings against not only your professional capabilities but also to the scope of the engagement, members really do start to understand the risk that's associated with the work that they're doing, and then, of course, the protections that are offered by the engagement document. Now, interestingly, quite often when I'll get a call from colleagues in the legal profession and around clients that they might have, it's around disputes in particular with fees and billings, and essentially the protections that are offered via the engagement document. So if you have an engagement document that clearly articulates the services that you're offering, the expectations of your clients, the scope of those services, and what the expected outcomes of those services will be, and that is, in this case, to produce a tax return that's compliant with the tax law, then you are extinguishing your duties under that engagement document. So, just in terms of the statistics with respect to what the Quality Review Program finds with APES 305, what we do tend to find it's the third highest non-audit breach identified under the Quality Review Program last year when we collected all the statistics for last year. And where we find the most common breach is that either members don't have engagement documents in place for all members, they've only had them in place for their audit clients, let's say, or the engagement document is out of date and does no longer reflect the extent of the services that the member is providing. So that leaves the next question. How often should you be reflecting and changing this documentation? Well, in the perfect world, you do it every year. However, in the practical world, where that can be very, very difficult to achieve, you really must do it whenever the client comes to you and says, oh, look, I'm venturing into a new area. I think I might need you to take on this particular service or this particular type of work. Any time when the work changes and the deliverables change for that client, you should be reviewing that engagement document to ensure that not only is your client's needs being met, but you are protecting yourself. That's the key fundamental principle of APS 305. So once you ensure that your terms and scope of engagement are documented and communicated for every client, these terms of engagement must be in an engagement document. Now, you probably hear me go on about an engagement document. Why don't I say an engagement letter? Well, the reason for that is it doesn't need to be a letter. It can be a brochure, it can be a pamphlet, it can be something that's a little bit more generic, especially this is suitable for iReturn clients. So where the service is quite limited to an individual tax return, the outcomes can be the same for all of those particular clients. So it can be appropriate to issue an engagement brochure or an engagement document. And if you do that, then you are meeting your obligations under the standard. Now, the next question may be, well, do I need that signed or do I need acknowledgement from the client? Yes. Well, best practice would suggest yes, that you do. So I would always encourage our members to ensure that the engagement document is initialed or signed by the client and you have a copy of that in your file. If the client sends you an email back acknowledging the engagement terms and it's from their registered email address with you, that is also sufficient. You can staple that to your engagement letter and that would be sufficient for meeting the requirements. There isn't actually a requirement to have the document signed, but best practice would suggest that then that makes it very clear that you've issued the document, that the document has been understood by the client and they've accepted your terms and conditions. So that shows that process has been followed, even though the standard at this point doesn't require it for tax services. It does for audit services, but not for tax services. Now, if we just move forward to the next slide after that, because I think I've already gone through that material. To sum up where you can get some assistance with preparing your engagement documents, CPA Australia, in accordance with its bylaws, will examine this particular element of operating your practice through periodic quality reviews. So it will never be an area that we don't look at. We will always look at your engagement documentation and look to providing you guidance, assistance and education on the improvements that you might need to make in those particular documents. Your reviewer, when they conduct this review, is looking to see that there is documentary evidence to support the engagements that have been performed. So therefore, your engagement letter is consistent with the deliverables for that particular client. So some supporting documentation that they may look at with respect to examining your engagement documentation, they can include checklists, file notes, copies of relevant documents, copies of returns, engagement documentation, etc. So it's not limited to just the outcome, it's also around how you've gone about performing that engagement, and they look to see that that is reflective of what's been agreed upon within those engagement terms and conditions. CPA Australia has a number of resources available to members on our website, both in the public practice area and also under quality review. It is actually possible for you to conduct your own review of your compliance against APS 305 by simply downloading our General Quality Control Questionnaire. We don't have a questionnaire for 305 as such. It is contained within the General Quality Control Questionnaire, and you can go and actually look at the questions we will be asking you. None of it is private or locked down. You will find that information in resources for reviewers, but none of that information is locked down for our members. And the reason for that is it's our objective to partner with you. We are not the regulator. We are there to try and help you fill any knowledge gaps that you might have with respect to the process. So we welcome you to go and access that information and to do your own investigations into your own compliance. It can be a very, very good thing if you've got junior staff within your practice. It can be an excellent thing for them to look at when they are studying this material throughout their CPA program or just after. So it can be a great exercise for them to do if you don't have the time to do that. That brings us to the end of my section of the presentation. So we will now, Michelle, I'll hand back to you for questions.
Thank you, Jo. All right, so how we're going to handle the discussion component of this webinar, we're going to go through 4 polling questions, and then we'd like you to pop your questions into the chat box for the panel to address. So the first polling question, Linda, if you could please pop that on the screen, is what steps do you take when a client wishes to claim work-related deductions? So if you could please hit submit when you've put your response in, that would be great. Sometimes people forget to click submit, so just make sure you click submit. You've got 4 options: explain when amounts can be claimed, cite invoices and receipts, complete file note or checklist, or all of the above. And you've got 20 seconds left. No, 5 seconds. I can't count. You've got a little bit of time left to respond.
Quick.
About 10 seconds ago there, Michelle. Okay, we've just gathered up those responses. The system's just doing a bit of a tally now. Just to let you know, if you don't actually hit the submit button, there is a slight delay in bringing up the results. So please, as soon as you do select your answer, make sure you also hit that submit button for us. I'll bring up these results in about 3 seconds for you, Michelle.
Thank you. Okay, so the 71% have replied all of the above. Would you guys like to make a comment about the poll?
Oh, well, I'd say that's a pretty good outcome. I think you need to do all of the things, but as we pointed out before, I guess there could be some confusion in terms of the question because, as I mentioned, you don't need to necessarily to cite all the invoices and all the receipts, but you certainly want to complete the file note and checklists, etc. And as I said, depends on the level of confidence and the circumstances, but you don't have to do an audit. So some people may have interpreted citing invoices and receipts in that context, but otherwise I think 71% is a good outcome.
I'd agree, Ian. And I think Ian's comments are really wise. I suppose we should, though, probably also stress that probably what we've seen in the past with work-related expenses is that there has been an absence of review sometimes on when amounts are allowable. It doesn't make sense that half the taxpayers in the country can claim a deduction for closing expenses. You do sense that a lot of tax clients think they're entitled to cents per kilometre car expenses based on reasonable estimates, and sometimes there's not a tremendous amount of substance to that. So I think everything Ian said is right, but I suppose in the context, a lot of people doing I returns are relatively simple returns. This really is under the microscope of the ATO, and therefore will be potentially scrutinised, as well as having obligations under TASA and H220 to exercise reasonable care and make inquiries where appropriate.
I'd agree with Mark on that point too, and Ian for that matter. One of the things that's most pleasing about this result is that our members are acknowledging the fact that there is the need to explain when amounts can be claimed. The most important thing you can do as a tax practitioner is to educate your clients. The more they are aware of what they can and can't do, the more efficient your engagement will become over time. So don't worry that they may become too educated on the topic. There will always be that service available for you to provide further education as the law is changing so rapidly. But do take that time to spend a little bit of time educating your client as to why they can and can't do certain things.
Thank you. All right, Linda, if you could pop up the next polling question. All right, so I think that's, I need to change my slide, sorry. Do you provide an engagement document to all of your taxation clients, including income tax returns? So it's a straight yes or no this time, and please hit submit when you've put in your response.
About 10 seconds left of this poll. There's 4 people in progress at the moment. Please make sure you hit that submit button. I can close it off. We can move on to the next poll. Just one last person. Okay, once again, sorry guys, somebody didn't hit that submit button, so there will be a slight delay. I'll bring up those responses in about 10 seconds for you all.
Okay, so 69% said yes and 21% said no. Ian, do you have a comment?
Well, other than the fact that it only adds up to 90%, I'm wondering what happened to the other 10%.
Well, one person didn't respond.
Oh, yeah. Right, okay. Yeah. No, look, I guess from our perspective, from CPB perspective, as I mentioned before, engagement letters are not, we haven't mandated engagement letters or engagement documentation as such, but as we know, as a member of CPA with a public practicing certificate, it is mandated. So the question then, I guess, becomes whether you're providing them for all of your clients, as the question asks, and as Mark indicated, you should be, I certainly do. I know as a practitioner in public practice that I do it for all my clients. There is that other element, I suppose, though, as to whether or not you need to provide it as a separate engagement for every individual client. So for me, most of my clients are in a client group, so I might have spouse and a couple of children, a family trust and a company. I provide the engagement letter for all of them, but I document within the engagement letter that each of those people are covered by the engagement, or each of those entities are covered by the engagement. And I also then ensure that the person that I'm actually dealing with, because you're usually dealing with one person, that person has authority to act on behalf of each of the other entities represented in the engagement letter. So that's just another practical aspect of it, I suppose.
Yep. Look, and I think, again, agree with Ian. I think one thing to think about engagement letters, though, too, is that it's yet another mechanism to reduce risk. We can't fully eliminate risk as practitioners. What we need to do is take steps and implement processes to try and reduce risk. And if you actually have the scope of the engagement carefully defined, on the weekend I did an advice on a rollover, CGT rollover, but I made it clear I wasn't giving advice under the engagement letter on GST issues or stamp duty issues. To make it absolutely abundantly clear exactly what I was doing and the scope of the engagement. It also might be the scope of engagement, the client providing information. I often say the hardest thing being a practitioner is not so much the answer, it's getting the facts. And so sometimes, making sure that both parties have responsibilities, which is one thing which is specified in our draft engagement letter, is really important. And with I-returns, I think, Joe's alluded to the fact you can have a tax brochure. So therefore, if you've got a CGT small business concessions, you might have a different type of engagement letter to one which is in a brochure, which you can hand out to your client if it's a standard I-return, if that's kind of your practice. But certainly it's fundamental to have that engagement letter. And as Joe said, if you go on the resources page for reviewees under a QA, you'll find a general quality control questionnaire that you can get access to, and that'll give you a guide on the types of questions that will be raised on a QA review. If you go to our template documents that are available on our website as well, which are regularly updated for developments, like for example, no client later early in the year, you'll find them a really valuable tool.
Thanks, Mark. I would just add to that the 21% who have said that they don't, they have a little bit of homework to do over the next week, because by not providing any engagement documentation to your client, you are in breach of your professional standards under APS 305. So once again, it doesn't have to be a personalised letter. It can be a brochure if it's an I-return. But for those 21% who have said that they don't, very honest and openly, and we appreciate that, the feedback for you all would be to get those that documentation in place sooner rather than later.
Thanks, Joe. So I'm just going back to the previous polling question, and Graham has a question. If a client provides a listing of claims for an I-return and states they have the supporting documentary evidence, would this be sufficient?
Well, I would say no, unless you ask that. Well, it depends on the nature of the claim, but I would be suggesting that if it's a new client, that you would be asking to see a sample of that documentation to satisfy yourself that it is appropriate. If it's an existing client that you've had for some period of time, and let's say they've been a client for the last 10 years, and every time you've asked for documentation in the last 10 years it's been provided, then you'd have a reasonable degree of comfort that you could go on that basis. But it depends on the circumstances, but ordinarily you'd be asking to cite at least some of that documentation to satisfy your reasonable care obligations.
Thank you. All right. So Linda, if you could please pop up the next polling question. Were you aware that an engagement document doesn't have to be in a letter format? So again, this is simply yes or no, and if you could all remember to hit the submit button. Okay, so we've got 74% said yes, 25% said no, they weren't aware. And I'm hoping now that you've attended this webinar, that answer would actually be 100% yes. Jo, do you want to start off with you this time?
Thanks, Michelle. Thanks for that. Once again, very honest feedback, which is fantastic. And what it's our responsibility to do is to ensure that you understand not only your obligations, but why they exist. And the fact that engagement documentation doesn't have to be in a letter is something that is commonly overlooked by practitioners who are not necessarily completely up to date with this particular standard. So it is a very quick and easy and efficient way of being able to communicate what your engagement terms are with a number of clients that potentially may only engage with you once a year for their income tax return. It is a very efficient way of doing that. But just remember, when you do prepare your engagement document, it can be a brochure, it can be just a flyer that you hand out, make sure that you have got a record that the client has received it, so the date on which they've received it. And it's quite a good thing to get them to initial it when they're signing their tax return before you're lodging that. So it's a good thing for you to have on file a copy that they've initialed it, or once again, staple an email to it that they might have sent you acknowledging those terms and conditions. It's all about your protection, and while it may seem a little bit of bureaucratic red tape, another thing to get through, it will provide you with protection should the need arise.
But in the context of a crackdown on work-related deductions, it's really important, isn't it, that you make it clear to the client the basis on which you're providing the services. So, for example, if the client makes representations and later there's an amendment, for example, you've got coverage, haven't you, through your engagement letter that you've put processes in place to make sure the client is aware of their responsibilities. Because the engagement letter is not just about our responsibilities, but also the client's.
Absolutely, and it's a good way of educating your clients that they are ultimately responsible for their tax return. Yep. And that they are ultimately responsible for the information given. So a lot of clients, some clients may think, oh, if I go to a tax practitioner, then essentially the liability and the risk only rests with them. And that couldn't be further from the truth with a tax engagement. The risk actually always rests with the taxpayer. So therefore, communicating that in your engagement documentation really does highlight to them that they have some responsibilities, and some serious responsibilities with respect to their tax return.
Yes, and we have other tools. There's a client substantiation declaration you could attach to the engagement letter too, which were also available on CPA Australia's website.
Can I just make a point there, though, in that context, that a practitioner will not satisfy their obligations to exercise reasonable care under items 9 or 10 if they simply accept the information that's provided by the client. So whilst ultimately it's up to the client to give you true and correct information, you still have that obligation to ask those relevant questions, to probe and ensure that the information the client is giving you is accurate, is believable, etc. So, it still comes back to you have to do, as a professional, you have to exercise your professional judgment to ensure that the information that you're given is correct and that correct information is ultimately submitted to the Commissioner.
And building on from Ian's point, which is really relevant, when you think of making those additional inquiries and the time you spend, or also think as part of your risk mitigation strategy, you don't want to get sued, you don't want to have disputation, you don't want to cause grief for your client, for the ATO or yourself, for example, if it's work-related expenses.
I just also re-emphasise that point in terms of minimising your risk. Interestingly, the board gets a number of complaints every year which we're obliged by the law to investigate. And those cases that get to the board conduct committee, where we've got to exercise those sanctions that we talked about before, one of the first questions I ask is, well, where's the engagement letter? I want a copy of the engagement letter. And unbelievably, most cases that get to the board don't show or don't have an engagement letter, which highlights the fact that, you know, if you don't have an engagement letter, you've increased your risk, you've got more chance of a problem arising. So I just totally re-emphasise that particular point about reducing your risk.
And that's a very valid point. And while APS 305 and APS 220 doesn't stipulate that there is a responsibility there to ensure that you're exercising that reasonable care, remember APS 110, which is the Code of Ethics for accountants, that particular standard applies to everything you do, regardless of whether it's tax, audit, insolvency, business services, financial planning, whatever it is that you might be doing. That requirement does cover all of those services. So while the requirement isn't as specific as what it is under the code, under the TASA code, it is quite explicit under your requirements in APS 110.
Okay, thank you. So I'd just like to thank David for his comment, which was, but it's so easy to take the CPA pro forma letter and modify it, why wouldn't you? So thank you, David.
Well done, David.
He also has a question. So he has an issue with a client who has been looking for paid employed work all year unsuccessfully and spending lots of travel meal money, all documented. Is this deductible when no employment was earned?
Well, I'll jump in. No, it wouldn't be, because it would be regarded as being incurred too early and apply cases like Maddalena's case, unfortunately.
He did get business consulting income separately.
Well, but then you have to look at the nature of the expenses incurred and for what purpose. And if they're not for the purposes of running the consulting business, but to gain future employment, they're regarded as being incurred too early, I think.
I agree. Yep.
Okay. So, Linda, if you'd like to pop up the last polling question. Did you know that if you are the registered mailing house for a client's company, that you are providing company secretarial services, which should be included in your engagement letter? Again, a simple yes or no, and remember to click submit. Okay, so we've got 76% responding yes, they did know, and 24% said no, they didn't know. Ian, do you have a comment on?
Oh, no, not really. I mean, look, from the 2PB's perspective, this is not a matter which would concern us in terms of providing company secretarial services. So I'll take a pass on that one.
Okay.
It's actually probably more a quality review.
Yeah,
and it's more about you understanding that simple services that you might think you're offering as part of one engagement are actually not part of that engagement, and they form another type of engagement that you might not be aware of. And it's interestingly, a quarter of you are not aware of the fact that by being the mailing house for those particular records, that is actually a company secretarial service, and therefore a quarter of you would therefore need to update your engagement letters accordingly for those clients where you offer that service to ensure that you're capturing that correctly.
I guess just one question I'd throw into the mix there is just what constitutes a registered mailing house. In many instances, practitioners will be the registered or will be the address that's registered with the ATO. So ATO correspondence will come to the practitioner. I take it that's not going to be a registered mailing house, and that's not need to be disclosed. That's the most common circumstances where I guess you'd see a practitioner in its interactions with the ATO having the practitioner's registered address as the address for service of notice for the ATO?
No, it doesn't apply in that case.
Point of clarification.
Yes, no, it doesn't apply in that case.
Yep.
It's more for the client's obligations under the Corporations Act.
Yeah. Good.
So Graham says that preparing minutes would also be company secretarial services?
Correct.
Yep.
Preparing minutes is definitely company secretarial services, and therefore you would need to clearly articulate in your engagement documentation that that forms part of a different function aside from the tax services that you're providing.
Can I just revert to David's question? He didn't actually hear clearly the response that was made, and wondered if you could repeat the reference to the case.
Yeah, I think it's Maddalena's case, David. I'm doing that by memory off the cuff, but I think that was a landmark case where I suppose if you're seeking work at, and incurring the cost of, for example, doing interviews and etc., that's incurred at a point which is too early before the derivation of any income. So it's Maddalena's case.
Okay, thank you. All right, so I've got a question for Ian. So can you provide some examples of where there is a legal obligation to disclose clients' information?
Okay, so this comes down to client confidentiality, and clearly if you're going to disclose information to a third party, you need the client's permission, or alternatively, if you've got a legal obligation to disclose that information, then you don't need the client's permission. So there are a number of circumstances. They're not extensive. One would be providing information to the TPB if we asked or issued a notice. Another would be providing information or documents to the ATO, but where they've specifically issued a formal notice under the Tax Administration Act to you to provide information. The others would be providing information to a court or tribunal pursuant to a direction order or other court process. So that's sort of three sets of circumstances, but that's pretty much it. They'd be pretty much limited to those sorts of circumstances.
Thank you. And if there is no set formula to determine if a practitioner is taking reasonable care, how do you determine that they are meeting their requirements?
Well, ultimately, it's a question of fact, and it's a case-by-case analysis, I suppose. And people might say, well, what do you mean by case-by-case, and what do you mean by, a question of fact? What I suppose is important is when there is an issue which comes before the board for the board to determine whether or not reasonable care has been met, it is actually the board members, and the board members are all practitioners in one way or another. So in essence what we have is a set of circumstances where it's practitioners judging the actions of another practitioner. So if you're in any doubt as to whether or not you're meeting the reasonable care requirements, you should perhaps just take a step back and ask the question, what would your peers do? What would another practitioner do in the same set of circumstances that you're now faced with? And if you think that, that the other practitioners would act in exactly the same way that you've acted, then you're probably going to satisfy the reasonable care requirements. On the other hand, if there's anything suspicious about the transaction, or you think that it doesn't sit well, then ask yourself the question again: what would my fellow practitioner do in exactly the same circumstances? And that's really, it's a peer group test, which is probably the best test that you can apply in those circumstances.
Thank you. So we've got one last question, and this is reverting back to the registered mail house polling question. What is the situation if you are the ASIC agent for the company and receive the annual reviews electronically, but you are not the registered office for the company? No other documents are received on behalf of the company.
Once again, it's still a form of company secretarial services that you're offering. Company secretarial services aren't limited or don't begin with being the registered mailing house. So you don't have to be the registered mailing house in order for all of the other types of services to then formulate under company secretarial services. So that's okay that the directors or the trustees are the mailing house, whatever that may be with your clients. However, if you're receiving any types of communication on behalf of the directors or the trustees, then you are performing company secretarial services, and you should be documenting that in your engagement letter.
Okay. Thank you, Jo. All right. Well, we've just about reached the end of the webinar. I'll just go around our little panel here and ask them for one final comment, key comment on client engagement. Ian.
Well, pretty simple. Let's make sure that you always ensure that you meet the requirements of the board in terms of the code of conduct. If you stick to the simple rules in the code of conduct, then you'll minimise your risk of exposure in any way.
I think I agree with Ian, and one thing I note with engagement letters is circumstances can change. So, for example, one thing we haven't gone into links today is no client, but if you go to the current template on engagement letters, there's information that you should include on no CLAR in your engagement letters, and if you're unsure what no CLAR is, and don't feel afraid if you are, because it is a genuinely complex area, there's resources available to explain it. But engagement letters can change in terms of what's required. So as part of your monitoring process under your quality issue control manual, be aware that that does change and you need to kind of monitor that periodically.
Finally, from me, I would say that your engagement document is your greatest protection. So therefore, it's one of your greatest assets within your practice, and it's the cheapest to prepare. So why wouldn't you use one in order to mitigate risks that you do face within your practice? Just make sure that you understand that it doesn't have to be a personalised letter, it can be an engagement brochure, and it is best practice if you can show or demonstrate that your client has received and understood those terms and conditions.
Thank you, everyone. All right, well, that concludes today's session. We hope you found it beneficial. We look forward to seeing you at a future event. And Linda, I'll now hand back to you to close it off.
Thank you very much. Thank you very much, Ian, Mark, Josephine and Michelle for a fantastic webinar. Also a special thanks to Sharon for your assistance in the chat box as well. And finally, a special thanks to everyone for your participation today as well as for your attendance. Like Michelle just said, this does conclude today's webinar. To exit, please click on that cross on the top right of your screen. Upon exiting, just to let you know, you'll be automatically redirected to a feedback form. Now the feedback form only takes about 30 seconds to complete. However, feedback's really beneficial for CPA Australia as well as our panel today as well. So please do leave us your thoughts. Okay, thank you everyone, and I hope to see you in another CPA Australia live webinar. Thanks everyone.